And this is where it's critically important. You must, before you get involved in this, you must in your trading plan, clearly articulate what type of market participant you are. Are you a little old lady? Are you a margin trader? Are you Joe Sixpack? You have to articulate this. And then that will actually dictate what you do here, given what happens in price. This is a perfect example of I'm going to simply pull up the price chart. I'm going to throw my reload zones on the price chart. There they are. I would have no problem whatsoever if you were a little old lady. And as soon as we got back to 61.8 to 78.6, I'm going to start working my stink bids. And I'm just going to start accumulating, kind of exactly what I showed you with that Kramer guy. Same logic. Obviously on this huge dump down here, if you had stink bids working at 61.8, you would have been filled here anyway. Hopefully you had another stink bid here at 78.6. So now your average long is sort of in here if you're just working stink bids. And I like that approach. I don't mind that at all. I might argue that as these W's come in, maybe I want to go and add to the position. Nothing wrong with that. That would be kind of like if I saw W's coming in on Kramer, I might add to that, especially off of this cute little W right there. That's a cute little W right there. If you were trading this, and this is where it's critically important, you must, before you get involved in this, you must in your trading plan, clearly articulate what type of market participant you are. Are you a little old lady? Are you a margin trader? Are you Joe Sixpack? You have to articulate this. And then that will actually dictate what you do here, given what happens in price. So you can clearly see this little W here. I mean, it's cute as can be. Down, up, down, breakout. Notice 2-to-1 risk rewards. So if you're Mr. Margin Trader, leverage trader, hey, I put like 20% of my portfolio in this, whatever, right? Well, you got your trade off here. Bang, bang, sell half at 2-to-1. I'm a margin trader. I got to book that profit, put my stop at scratch, and you're stopped at scratch right there on the remainder. It's just as plain as day. Don't overthink this. I might even argue, hey, look at there. There's a big W there. Let's see. Did you get 2-to-1 off of that? I don't think so. If you did play this W, this is a much bigger one. And that means you got to shoot for a move way up here. I might be inclined to actually let that trade pass because what I think and what I'm trying to teach you all here is, and let's see if you can answer this. If I was looking at this and I wanted to trade this, what's the profit objective that I should have in mind? Saying that, hey, it's going to go right back up to these old highs, or saying, hey, I'm going to take profits when it makes a new high, that's not realistic. Level twoers should be studying him right about now. Thank you. There you go. Somebody got it. So let's just do a 50% roll. Do you think that this level way up here is 50%? I don't. I don't think we're anywhere near there. So I would say you look at this image and you put on your 50% level, and that should be your profit object. Now, once you hit that 50% level, you don't have to sell everything. You could just sell half, right? And then put your stop at scratch. But the point here is to justify taking this W risk, and it's a big W, don't get me wrong. Do you see how it only translates to about a 1.1 risk reward ratio? I might be inclined to actually let this trade pass because it's just, you're not going to get paid enough to justify the potential risk of this thing puking out. Does that make sense? I hope it does. This is super, super important. The first guy I ever learned to trade with, good old Kenny Roberts. This was bread and butter. Always take at least partial profits, but he was a commodities trader, so you'd buy one contract and you'd sell one contract. You'd always take profits at the 50% rule. So the point here is how ironic this thing went up, tagged the 50% level perfectly, and then backed off. Do you think that there were a few people on Wall Street playing this on Coinbase who were actually following the exact same logic? I do. But do you understand why the market stopped at exactly that 50% level? You could have looked at this and said, well, okay, well, Brian, there is this W over here. Why don't I take that? And let's see whether I can justify 2-to-1 off of that. Right. So that's down, up, down, breakout. So buying this breakout, playing this W, that's a 1.34 risk reward ratio. Still, nah. As me personally, I need to see 2-1. And so what that says to me is if you were like, well, where was the trade, Brian? Almost 9 times out of 10, there's always a trade here. Where was the trade? And I think the trade was to buy this W, right? I don't know whether we can zoom in so you can see it, but notice we went down, up, down, and they even came down and they played with it right on this candle here. So they were really cheeky, but I think that that was your trade. And actually I might even say that that was your trade. Even that's even better, something along those lines. But it does look like this low actually washed these lows. So you probably have to go down like 4 hour or something and see this. Yeah. If anything too, this is the danger of playing these kind of illiquid markets is it looks to me like there was some effery through this candle here. If anything, Johnny Hoagland, whenever we interact with him, he always says, maybe place your buy order where your stop loss would be. So there's the low. Let's see, did they take that low out? That was 110.65. And this low here, 110.45. Those jerks. So it looks like they put this bottom in, they broke it out, then they slammed it down and just said, hey, let's see if we can go after some weekend stops. But notice, this actually is a good lesson for you guys as well. There's a lot of people in this world that don't like to just use intrabar. They want to use clothesline. So notice if we change this to a clothesline, notice, oh, geez, that W disappeared. And it turns out the W is over here. So on a clothesline basis, it would be something like that. And you're risking against that low there. You wouldn't get stopped out because you're trading clothesline. So you'd be like, whoa, Jesus, as this thing's coming down into here. But, okay, phew, I didn't have to worry about that. I know there are some people that I've traded with over the years that say they want to see the market actually close on an hourly basis below these lows. And I actually make the argument, I don't think this is the trade. I think because of this, so we go down, we go up, then down, then up, but that's kind of a weak low. Boom. Okay, well, that's a pretty strong low. And then turn up. Yeah, that's a tough one. But I definitely think that your W pattern, and you can see the moving averages. Adam, you love using these moving averages. So I definitely think you can see it in here. Somewhere down in this area, I think was your bottom, if there was going to be a trade.